Good morning, Dennis Smith reporting from the Board of Trade in Chicago. Wednesday, March 20th. It's about 10 minutes till 9. Cattle futures working lower as I speak, putting out new session lows. They're pressing hard. Feeder cattle futures sharply lower. Hog futures slightly lower. The opinions expressed in this broadcast are mine and mine alone. My opinions are not the opinions of ADM Investor Services, nor are they the opinions of Archer Financial Services. Talking about the cattle market here this morning, futures approaching 124 is an area where we will be looking to unwind hedge positions, mostly in the April options and some April futures outright. Possibility that this market could yet decline on further toward 122, but I'm looking to unwind a lot of hedge positions. If feeder cattle futures were to trade sharply lower, meaning say 250 to limit down, we would also be willing to come in and unwind option positions in the feeder cattle market. So feel like the cattle markets is reaching perhaps some sort of a climax. It's not that I'm bullish, but it's that I'm willing to take the profits right now and to lighten up substantially on bearish and short positions and to be pretty much on the sidelines, especially for cattle that are going to be moved in the very short term. Cash trade yesterday, 125 in the Southern Plains, 125 in Nebraska. I should say 124 to 125 in Nebraska. That's all lower money compared to last week's cash, which is 127, and that's versus 128 the previous 2 weeks before that. So weakness in the cash market driven by weakness in the wholesale beef as the beef packer looks to maintain profitable margins. They were losing money for months, and they've got a margin around them now, and the beef packer is not going to be willing to give up that margin, at least not easily. Perhaps later on in the summer, as supplies tighten up further, that situation might change. But for now, look for continued pressure in live cattle. 124 is a big area in that April live cattle contract.